Let's make that bigger over here. So let me go into the chat. How you guys doing? Yeah, so I can hear music in my headphones. So clearly there's more I need to learn about how to set this stuff up technically. I'm using my webcam today because I'm in Tenerife. That's no excuse. But whenever I'm shifting apartments, I'm moving here. I'm just focused on work, getting my laptop out, doing work. So I haven't had a chance to set up, make myself look super pretty on today's Wavecast. So if you guys can't hear it, I'm just going to turn the music off because otherwise it's meant to be a shared experience. Otherwise, there's no point. So yeah, sorry for being late today. How you guys doing? Give me an emoji that represents how you're experiencing your reality right now. A single emoji that represents your current life, your current day. Evie says, what kind of music? When you're streaming music, if you plan on using that for potential for content later, it's got to be royalty-free music. So today I was going to be streaming out of Spotify, and it's lo-fi music. It's just kind of like chill music, you know. Jan's happy. Shirley is either overwhelmed or stressed, or Evie loves lo-fi. Well, look, you guys can just go and listen to your own lo-fi. But what's really weird is last time I did this Wavecast, miraculously at some point during the Wavecast, the music just turned on. So I'm going through a software called Open Broadcast software, I think it's called. And that's why, like, I'm inside. It's called OBS. I'm inside there right now. This is why, you know, if I do this, I can move me around. I can do all kinds of cool stuff. And I'm still getting used to it because before I started the King Silver Academy, before I started Wave Counters, I was streaming on Twitch. So I was doing it inside OBS like this, and but I've forgotten loads of the stuff I was doing, and I've also added cool stuff. I didn't do music when I did the Wavecast. Well, at the time it wasn't called the Wavecast. It was called, I think it was just called Wave Counters. I think that's where the Wave Counters name came from. But I wasn't doing music, and it's just the technical stuff of music. And anyway, let's go back to the chat before I dig in. Richard's feeling cool. Shaman's feeling very mystical. So that's only 1, 2, 3, 4, 5 people who are engaging. Come on, guys. I want to see some engagement. Give me an emoji. Let me know how you guys are doing. And then we'll get stuck into the charts and have a look. How you guys doing with the course so far? What module are you on? Is there any part of the course that you are struggling with? A lot of you are on, Evie's is still on module 17. Yeah, 17 is probably the hardest module, right? Probably the trickiest module because there's a lot to take in. But once you've cracked it, you'll never be afraid of double combos again. Shirley's on module 13. I'm trying to remember what module 13. Module 13. Yeah. So that's turning knowledge into experience. That's what module 13 is called. Very important module. That's going to take you into futures contracts and shorting and leverage and all that kind of stuff. So it's a really strong module. Richard says, Andrew, you've disappeared. For anybody else, or is it just Richard? Richard, just reconnect, refresh. Yeah, it's fine for everyone else, Richard. So just reconnect. Try connecting on Google Chrome if there's a technical issue. Google Chrome seems to be fine. Yes, very scary. Haven't taken action on it yet, which is good, right? You don't want to be taking action when you're afraid. You don't want to be taking action when your confidence has, reached the point where you feel comfortable moving forward. The best analogy, I think, is either with fighting or rock climbing, because there's the potential to get seriously hurt, right? And you only excel You only move forward in alignment with your confidence. So if you're going to scale this rock where there's a chance that if you slip, you die, you practice with ropes over and over and over and over and over and over again. If you're still scared, keep practicing until you know every single inch of that rock, and only then would you then go up there with no ropes. Same with fighting. If like if you're terrified to get in the ring because you have no idea what you're doing, don't get in the ring. Practice whatever it is you need to practice over and over. Drill, 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 drill. If you're sat in front of TradingView or you're contemplating trading and you're just petrified, you're confused, you have no idea whether the price is going to go up and down, for God's sake, don't trade. Please, please don't trade, for God's sake. Unless it's for pennies or for the kind of money that like just it's throwaway change for you. It's like, it's not, fine. But even that can start to add up over time. Simulate. Just trade with a spreadsheet, right? And only once you've developed confidence by doing it through that, but with simulated trading, only then should you then shift it to doing it with real money, right? This like the stories that look, I've gone through this, the stories of losing loads of money, which by the way, it happens on the journey. But if there's a story of like, man, I lost £1,000 this weekend or whatever, and you're not making consistent money, because if you make £1,000 here, £1,000 there, then you lose £1,000. All right, it's part of the game. But if you every time you trade, I lost £500, I lost £1,000, like, what are you doing? Stop losing money. Stop it. Start simulating your trades, because why waste why spend £500 on a lesson, £1,000 on a lesson? Like, stop spending that money. Do it for free, right? Just use a spreadsheet, use the journal that is inside the community, simulate your trades. And I know where it comes from, because this is I'm still human. I've been through this process. It comes from you're learning on the course, and you see what you think is a potential setup. Or Andy said, this fourth wave, this, and you think, well, if I put this trade on, I could make some money. I could make $100. I could make $500. And you're thinking about the potential win, but you're thinking like a gambler. You're like, if I put all my money on black, if I put all my money on red, I could win $10,000. Yeah. But that's, you're not appreciating the real risk you're taking. And when you're learning, right, when you're learning trading, you don't have the experience, the skill, the awareness yet to know whether what you're seeing is actually a good opportunity. You're not actually aware of what the true risk is that you're taking. And until you develop that competence, please just simulate your trades, right? And once you've been simulating your trades over the course of months, and this is where patience has got to come in, right? The same patience that you would have if you were tasked with rock climbing without any ropes, and you knew that your life was on the line. You can't like trick yourself. You're not gonna fly up that mountain without any ropes, you're not gonna do it, because you're going to die. But with the trading, we can trick ourselves. We think, man, I could win $1,000 in the next few hours if I just take advantage of this trading opportunity. Fine, if you've got experience behind you, experience of simulated trades, where this trading setup that you're now looking at, you've seen before, you've seen 10 times before. Be patient. This is a skill that you're learning slowly. It's the only kind of skill. It's the only way that you can learn this skill, by learning slowly. Yeah, you can ingest lots and lots of content, right? You can learn loads of information, but the true skill is acquired slowly, right? By just exposure to the markets, watching Bitcoin, just exposing yourself every single day, like learning a language, and then simulating your trades. And then what happens over time is, well, you simulate your trades, but you lose, right? You lose, but you don't lose any money. You get the lessons for free. And you go, oh, okay, I thought this was the trend was going to change here, but it didn't. Wonder why? What, et cetera, et cetera, et cetera. And then eventually your simulated trades start becoming successful. And then after months and months and months, you look at your results. You're like, man, I'm getting about 5% every single month. Like, I think I'm ready, to start dipping my toe in live, but with real money. But it all comes from that patience. If you are desperate to make money, you won't succeed as a trader. You won't, because you don't have the patience. You'll just continue to make bad decisions. This is a skill that has to be acquired in a space, in a mental space of calm, peace, patience. There can be no greed, no greed. There's no other way to put it, right? There's even greed, because there's like greed of like, I want more, and there's also like desperation. I need more. I need to pay my rent. If I don't make this trading work this month, I'm going to be kicked out of my house. It's not going to work. Like, yes, once you're a competent trader, you've got the skills, you've got the experience, you can sit down and you can just make money anytime. But when you're learning, if your starting point, if your foundation is, if I don't make this work this month or this week, if I don't make money today, I'm screwed. It's not going to work for you. It's not going to work, because that's not the psychological and emotional foundation to learn this, right? You're not gonna simulate your trades. You're gonna just keep on trading for real when you're not ready. You're gonna keep on just eating or losing money. $5 here, $10 here, $20, $50, $20, and you're gonna get yourself into an even worse situation, right? If you have no revenue coming in whatsoever and you're relying on this and you're still learning, you've got to look for revenue. You've got to get a job. You've got to have that your lifestyle, your bases, your food, your accommodation covered. And then trading is this skill you're learning on the side. This is like, you've heard of the side hustles. It's like, if you can't feed yourself, and you've got no money coming in, don't start a business and where the success of that business is not certain or it's not guaranteed. Trading's kind of the same thing, right? Because there's a process that you have to go through. If you go down the process and you don't give up, the golden green pastures that are waiting for you. But it's a process, and you have to be willing to go through the process. That was a big long rant. I haven't even opened up TradingView yet, but it's so important, and it's like, and I'm impassioned because I've bloody done this. I've done this, and it's almost like every trader has to do this. They have to, you have to realize this by just learning in the most expensive way possible, just losing money, and it's almost like you have to spend that money. That's the process, and I'm just imploring you. You don't have to, right? It takes patience, and it's the fear of missing out. Because if you've got your simulated trades for a whole month, and then that month you're 20% up, you're like, man, if I'd have been trading for real, I could have made thousands of dollars this month. Like, just get that out of your head, because that's like the missing out part. But in actuality, what happens is you just lose £1,000 this month, £1,000 the next month, or more. It's not necessary. Anyway, so let's go into TradingView. Share screen. TradingView. Okay, so you guys saw my my quick wave count this morning. Where are these? These should be tucked away in a folder somewhere. Trend line. So I've got all these folders. I think, no, not that one, not that one, not that one, not that one. There we go. Yeah, that one. So let's drag. I'll make a folder for these ones. So I'm just doing a bit of housekeeping. There we go. Those two trend lines. I mean, man, once you start to add on all of these Andrew's median lines, as you guys have seen, your charts can get insanely busy. Which, if you're used to it, right? It's fine. Rename to White Bull Pitchfork. but when you show people, it will just like, what the hell is going on? So let's start with no pitchforks for now. And we've got the volume here, and this is the monthly VWAP. That's something we're going to be covering in a later module, but you can see prices come down and found support on the VWAP. And also this is the point of control, which is like over this period, it's like the most volume in this particular area. So even without any of the Andrews median lines, we can see that it's hit a key support level here. Whether that means that we're not going to drop down more, because of this particular structure right now, it's anyone's guess, because this looks like a corrective structure, and what follows a corrective structure? Usually another impulse down, right? In this case. So I was having a conversation with Shaman today, and I was saying that what you want to see is you want to see price bounce back up with force. Like you see this, like these like a bounce here, right? These bounces. And then you want to see price come up and break this market structure. So you've got this like lower lows. I haven't actually been marking these. You can see here, I like, you can see my lower highs, lower lows. So you can see here lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And we've got a higher low here, right? So it stopped before this lower low, and prices come up, and it's not breaking up. It's not breaking any of these three, and it's not breaking this area here. So because of that, we haven't got any indicators right now. There's no signal. There's no signal that the trend has changed, and this is one of the biggest reasons why most people lose money when they're trading, even when they're getting quite good at analysis, is because they're trying to pick tops and bottoms, right? They see this and they think, right, trade now. Well, there's no signs other than there's indicators that suggest that there's some support here with the VWAP and the volume profile. And we're going to get into the Andrews median lines and stuff in a second. And even if you're just looking at like just the naked Elliott wave, right? My wave count here has a W and the X comes down, and it pings the 0.618 perfectly. So you might think, right, well, I'm going to buy it now because it's pinged off the 168. I've got a correction down in the X wave. It's like, yes, fine, but Elliott wave on its own is not enough. Elliott wave is the contextual. It's giving you the context of the crowd psychology at play right now, but it's not enough, right? And this is why you can see with the wave counting course, I'm laying in, there's like a tech analysis, a TA analysis, a TA stack, right? It's not just Elliott wave. We're not just counting Elliott waves, we're also counting pivot points, we're also counting we're going to get to more stuff later. So this is the starting point, right? The Elliott wave structure, the Elliott wave structure, the market structure of the highs and lows. This is the beginning. Okay, so we think, okay, this might be the area where it's going to change direction, but there's nothing right now. Prices hasn't done anything to confirm a change in direction yet. We've got a higher low here, right? If I just zoom in a little bit, we've got lower lows, higher lows, lower lows. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and now we've got just a little higher high here. That's all we've got, and this could change in an instant. So we've got, and I've got these all saved in templates. So I've got a higher low. That's it. That's all we've got, and that isn't enough. Let's change that to a lower low. Right there. Oops, lower low. Okay, so we've got a lower low, lower low, 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 and then we've got a higher low. That's it. Even this hasn't broken out above even this immediate lower high. So the first point we want to break is this level here, I think. The first one actually is there. That's the first one. The next one's here, and then even higher. If it breaks this, then that's just, you know, treble confirmed. But this will be the first point we'd want to break. Higher low right. Sorry, so lower low, not higher low. Lower high right. Lower high right, and lower high right. Oh, didn't work. Lower high right. Okay, so this is the market structure that we want to break to have the next trend, the change in trend confirmed. So we want to see price do this, right? That's really, really thick. If it does that, that's the first confirmation. If it does that, that's the second. Let's bring that down there, right? Because then we break the first market structure, and then we break the second market structure. The first one, if we see that, and then we come down and we get a lot, like we don't get this, we get this, and price starts to change direction, then I like, that's a good sign so far. But again, we have to look at the structure of this correction, because this could still be a like a correction, and you want to use everything you've learned in the course to analyze that. I haven't broken down this the subwaves of this X wave. I've been too busy today, but that's something you would definitely want to do. So right now it's a kind of a wait and see, because of this structure. We haven't got a bounce above market structure and a come back down to test. Well, we're going to be testing median lines. So, but what's cool is, in fact, I'm going to bring on some median lines, because what's cool is on the last wave count I did was on Saturday morning, and I believe on Saturday morning price was up here. I think it was just up here. It just pinged one of the median lines, which I think, which median line was it? Yeah, it was up here. It was this one here, and this median line is a I believe that's a model. Is it a shift? I think it's a shift. Yeah, it's a shift. That's a shift. And at the time, I think this was a modified shift. Yeah, it was a modified shift. So price had just pinged this energy point here, and price was up here. So I forecast that price was going to be coming down to I thought these areas here. It came down even lower, and I later changed this to a regular shift, because price was responding really well. See how price has come right back down, and it's come first of all right into this energy zone that I pointed out on Saturday morning, right, like just pierced this energy point. And I'll show you where this energy point came from, partly from this, but I'll show you where in a second. So it's came just right down into this first energy point, to the median line. And we've got a whole bunch of other pitchforks, which is really, look at this. So this is a new one. I mentioned this in today's wave count. So as we start to break down this below this immediate market structure, and the first market structure was this point right there, right? And you can see that price just broke down below it, came back up and tested it before it started to fall down lower. So as soon as it broke down below this point here, which would have been at the time a higher low, right? So like higher lows, higher highs, higher lows. So this was going in the other direction now. As soon as it broke down below this, right, now we get the confirmation of this is a new pivot. So we got P1, P2, P3, and that's how you create this this new pink pitchfork, which is now looking at price going down. And look how beautiful is this. Price just pings it absolutely perfectly. It comes down through the center of our energy point, and it pings it perfectly. So let me just get rid of that quickly, because I want to look at some other pitchforks. And so this is one we had the other day. I had this on Saturday. This is a shift pitchfork, I believe, yeah. And that's using pivot 1, 2, and 3, P1, 2, and 3. So is that right? Yeah. And I wonder why we did why we used that. Let me go to the regular one. So when you've got so many pitchforks up, it's hard to remember. Yeah, I don't know why I use this one. I don't think we even need it, actually. Yeah, I'm going to get rid of that. I don't think we need it, because we've got this beautiful pitchfork here. I think, let's bring this back. I think it's because I was preparing for the potential of price not reaching this median line, right? I was the wave count that I had Bitcoin bottoming out about here, right? At this median line over here, or you can see these energy points here. So I was anticipating that it wasn't going to reach this median line, and therefore I was getting the shift prepared. But it did reach that median line, so we no longer need that shift. This is our kind of main one that we're looking at, right? And you can see I've got these sliding parallels. Price came up, it broke past the median line, And so I created a sliding parallel, copied that over to the other side of this median line. And you can see price came down into this energy point and bounced off that sliding parallel. I've got SPM, so sliding parallel mirror, because I've mirrored it really, really nicely. And then it finally broke down below. And it's come down just slightly past. And you can see now where this the energy point came from. It's the interaction between the lower parallel of this white pitchfork and this center median line of this shift pitchfork. But I think if I change that to a modified shift pitchfork, I think, yeah, is that right? If I change to modified shift pitchfork. Okay, so that's where that energy point comes from. And then this energy point comes from the shift interacting with this white median line. And again, this is just 0.1, 0.2, 0.3. And yeah, it's beautiful to see. So here we've got price reached the median, the shift median line, the blue one. It's reached the lower parallel, come through this energy point, the lower parallel of this bullish white pitchfork. I'm just going to run through these pitchforks and just kind of see what we've got on the pitchfork menu. That's some market structure there. Okay, so we've also got price coming and reaching this lower sliding parallel, and this sliding parallel was derived from when price came up and bounced off the median line and then exploded through. The distance that it went past the central median line, and just to give you some context, this is sort of a higher degree pitchfork that comes from all the way back here, right? All the way back in September 22nd. And then using these big pivot points to forecast price direction. And it's really beautiful. Look how price came down and, you know, pinged the lower parallel here, launched up and pinged the median line, and you can see it's oscillating around, and you can see these mirrored sliding parallels. Price came up. I created this sliding parallel, copied it the other side of the median line, and look what happened. Price just pinged it absolutely perfectly, came back up, didn't quite reach it, came back down again, just found support a bunch of times on this sliding parallel, broke down, came up, found resistance. So this line is really, really strong, right? It's really responding to this to this sliding parallel. And then look what happens. Price comes down and it's finding support on this sliding parallel as well. So what else have we got? We've got this, which I don't think we need anymore. Price did ping it. It came back down, broke past it, came back up, found resistance. It came back up and found resistance on the first warning line. And again, when price came all the way up, it found like resistance on the upper warning line. I wonder if it's still in play. I don't think so. Yeah, I mean, price did come back down, look, from the first warning line straight down to the second warning line. But I wonder if we turn on number 4. I mean, yeah, look at that. So I'm keeping that on because I think that's still in play. So look at this area here, and you'll see in a second when I turn everything on. This one area, we've got so much confluence. So this is a shift, I believe. Yeah, that's a shift. Or is it a modified shift? It's a shift. So lots and lots of sliding parallels here. I don't think we need it anymore. I mean, we have got some resistance on this sliding parallel, but I don't think I'm going to keep that one on. Then we've got this one. Yeah, that's old news now. We don't need that one anymore. And this one is from, I think, yeah, all the way back here. Yeah, that's a shift. And price just responded so beautifully. Hit the median line, came back up, hit the median line again, found support, so resistance on the upper parallel. And we've got the first warning line, and I just found it quite useful. But I think now it's time to put that one to bed. What else have we got? And now this is the main corrective channel that we're in, right? So we've got our A, B, C, which is our W, and you can see here in the blue. So we've got the W, the X, and then the idea is this is now the Y in process, the WX, the WXY. So we're looking to be in the Y of the Y, and that's the final Y there, and that's the corrective channel that we're in. And there's still more. I don't think that's useful anymore. We don't need that. And then I've got my these are Babson action reaction lines I'm kind of experimenting with, but we don't need to go through those today. And there's some higher macro ones there. So, okay. So look what happens now when we zoom in, and you can see where these energy points come from, which are when two median lines cross, and when they're thick, that means they cross in opposite directions, and when they're thin, they're just crossing, but they're in the same direction. And it's when they cross is when they have the most power, most energy, right? The most attractive magnetic energy. So we've got our shift pitchfork there. Price, it has found support on the median line so far anyway. Then we've got our bearish regular pitchfork, and price pinged that median line perfectly. Then we've got our bullish pitchfork. Price has come down and it's found support on the lower parallel. Then we've got our is that a regular or is that a shift? I forget which one it is. Anyway, so it's going from way back, higher degree, and we've got this beautiful sliding parallel. Price has also finding support on that sliding parallel. Then we've got the second warning line of this pitchfork. That is kind of a long pitchfork, but it's a regular pitchfork. But price seems to be responding quite well. So we've got the first warning line, sorry, the second warning line offering support right here as well. Then we've got, that's not going to be too useful for us. That's not useful. That's not useful. That's not useful right now, and that's not useful either. So here we are. So it's, and see, now I've built it up slowly. It's not hopefully too as scary, but look at all of this confluence that we've got, right? And you can see now these how I created these energy points. You can see where all these median lines are interacting with each other. Some of these need to be moved slightly, but where they're actually that should be resistance strong. And in fact, some of these I think are from old median lines have taken away, but that's where they come from. And you can see now, look at this area here, man. This is nuts. There's so much going on here. Like this zone right here is a massive energy zone. So given all of this, given price has come back down and perfectly hit the 0.618 retrace with this X, what I've labeled as an X wave. So given that the Elliott analysis says that we're now expecting the Y wave up, given that all of these Andrews median lines are, there's so much confluence in this area, I would say if I was going to bet that we are going to go up from here, but it's easy for me to sit here and do a forecast, right? But entering trades is a different thing altogether. Like, in other words, even though I'm saying that I think the probability is that the price is going to go up, there is still a chance that price is going to come back down for maybe one more leg, just because of the A-wave structure of, you've got, like this looks, there's aspects of this which are impulsive, and then we've got this corrective stuff over here. We might get another little push down, right? One more push down, even to the 1.618 down here. Who knows, right? Because of this structure. What you want to see ideally with a trade setup is you want to get a movement upwards, breaking the immediate market structure, and then come back down and finding a nice Fibonacci retracement level, but ultimately having a higher low, a higher high, breaking immediate market structure, at the very least breaking this market structure. and then you want to get a higher low forming. So we're not seeing that right now. So as of this very second, even though I'm saying there's all this confluence here, there's still not a trade setup right now. And even though I'm not using these wavecasts to give you trade setups, because it's irresponsible for me to do that, and unless I'm putting in the effort it would require for me to put a trade on. If I'm not doing that, then I'm definitely not going to be telling you guys what I think you should do. Definitely not. I'm just telling you my thought process, that right now, as of looking at this, there's not a trade setup in the moment right now. In the moment right now, that's all I'm saying. I would want to see price come up, break market structure. At the very least, this level here, really, that's the level you'd want to break right there. Break above that point there. That would be a great sign. And then you'd want price to come back down, and there's a whole bunch of these different median lines that you want to be testing. And given that we're looking for a bullish structure, I wouldn't really want to see it come down and test this median line, because now it's going to break down lower, and it's going to create a lower low in order to do this, which means I would then have to wait for a more confirmation afterwards. So I think the if I start to get rid of these now, the green, I'll keep that on. Yeah, the white one I think is the most interesting. So that one is not what we're looking for right now. The blue one, I mean, the thing is, price is hovering below this this lower parallel. So price has so I marked this sliding parallel here. So because I'd want to see it break out above this. If it doesn't do that, then I'd be looking out for another push down, But if it does break out above these levels, then I'd be looking for it to pull back either to this median line, to this lower parallel, sliding parallel, or maybe even this green sliding parallel, which seems to be quite important, or maybe where some lines cross. But ultimately, you want to look at the market structure. Sorry, the wave structure. If we get a nice impulse out of here, then okay, that's great. And then you look for the correction. I'll be looking at a wave 1 and a wave 2 of the coming, unfolding waves. So you can see how it all layers on top of each other. The wave count comes first, and then as we get a nice structure here, we might want to, can we draw a nice median line from here? So, for example, could we draw something like that? You get the idea. And then you start to layer things on top of each other. So market structure, wave counts, Andrews median lines, and a bit of good luck, right? So let's go to the chat and see if anyone's been saying anything. No, they haven't. So is this helpful, by the way, what I'm doing right now? Is it helpful? In fact, I just realized that I have been sharing my screen inside. I've been sharing my screen inside of the Lions community rather than the way I should be doing it, which is inside my fancy OBS program. Not that it makes much difference, but that's what I should have been doing. So Shirley says, yes, a bit over my head, but will be really useful when I get to those modules. Yeah, you're on module 13, so none of this stuff will make any sense whatsoever. Marcus says thumbs up. I'm going to grab some water. Evie says, looking forward to learning about pitchforks. Yeah, it's a game changer. Absolute game changer. Because where, I'll just bring it back to me for a second. So where EditWave teaches you, it's a method of analyzing crowd psychology, right? The macro crowd psychology. What's the sentiment in the marketplace, and which the patterns are revealing. You know, are we within an impulse wave? Are we within a correction? Are we within a correction of an impulse wave, or a correction within a correction? So, you know, it allows you to analyze the this crowd sentiment in like the fractal crowd sentiment, so that you can get a sense, like I showed you. Like, so we've got the wave W, the X, we're expecting a Y up. That Y up is the Y of the Y, and after that we'd be expecting this. So it's a broad brush macro outlook. Where I think people fail is they think that Elliott wave is a trading method, and it's not. It's not. Elliott wave is it's the macro. It's like the context. You know, it's the setting. It's the environment. But setting an environment alone isn't enough. And this is why in wave counting immersion, Elliott wave is the foundation, or one of the foundations. And then the next technical analysis stack edition is Andrew's median lines. And what Andrew's median lines is, it allows you to analyze the market geometry, right? The market geometry. And now it's you can see where the direction that price is likely to go, and the hidden angled support and resistance that price is likely to respond to, based on the market geometry that is otherwise hidden, right? And Andrew's median lines allow you to discover that underlying market geometry. And then we're going to be adding some more layers on as we progress through the course, because we're you know, the end is in sight in terms of me producing the course. The next module is module 20, and there's 26 modules in this course. So, you know, it's been a long journey, but we've got more to go, and it's just stacking on top of what you already know. And it's like your technical analysis stack, and each layer of the stack performs a very specific function. And until you complete that stack, my advice is don't trade live, unless you've been learning trading for a while and you've got other things that you're learning outside of what I'm teaching you. And this is where the patience comes in again, right? This is where the patience comes in. And I think I've seen a few of you posting frustrated messages saying, I did a trade, my wave count said that this was wave 5, and then price, it just keeps on just not being right. And it's like, yes, because you're trading too soon. You know, you're not doing what I said you should do, right? Elliott wave is the foundation, but it's not enough on its own, and it's very powerful, right? And there are people who succeed on Elliott wave alone, but to me, that's like somebody going into a mixed martial artist competition and saying, I'm only going to do karate. So, what about all these other moves that are really, really good in other martial arts? What about Brazilian Jiu-Jitsu? What about this? What about this? So my approach is as a mixed martial artist. What works, right? Bit of Kung Fu, bit of Brazilian Jiu-Jitsu, bit of Taekwondo, a bit of boxing, a bit of this, right? Whatever works, but not just randomly thrown in. As you've seen, that I've brought Andrew's median lines in a very particular way. I'm like, it's like, okay, do you remember this part of Elliott wave? Do you remember wave 1 and 2? Well, it's funny that, look at this, and then introducing Andrew's median lines to combine with, to complement, to build on top of what we've learned already. It's not like, all right, we've learned Elliott now, let's put that aside. Now we're going to learn Andrew's median lines as a completely separate thing. You've seen, for those of you who got to that point, that's not what I'm doing. It's like we're building a structure, right? And now we're building on top of what we've already learned. And you'll see as you go through it how, as I introduce new concepts for Andrew's median lines, how I show you how, you know, this particular part complements that particular part of Elliott wave structure. This particular part complements that part of Elliott wave structure. So you can see how I'm starting to build on top of what we've got. And I don't know, I haven't seen anyone do this. I haven't seen anyone on the internet combine Andrew's median lines with Elliott wave principle. I saw one video and it was terrible. it was it wasn't even correct. It wasn't even doing it properly. And I just haven't seen it combined. And it's crazy that, because both Edit Wave and Andrew's median lines were discovered, conceived, developed in the 1930s. Edit Wave in the 1930s, and Andrew's also in the 1930s. So that means that this stuff was made public 90 years ago. And obviously YouTube is not 90 years old, but and I haven't seen anyone combine Andrew's and Edit's work in the way that I've been doing. I'm not saying this to blow my own trumpet. I'm just saying it is what it is, and I don't know why, because they complement each other absolutely perfectly. And there's more to come, right? It doesn't end there. There's more. There's more we're going to be adding to our stack, and I hope you guys are along on the journey and you're following along. And I know a lot of you haven't got to that point yet, but you'll get there. Let me go back to the chat. Carolus says it would be very useful to listen about trading psychology even more in one of the videos. What module are you on, Carolus? Because I go into psychology a lot in module 4. If you want to go really deep into crowd psychology, the psychology of trading, then all of Mark Douglas's work, all of his books he's written, Mark Douglas. The first one, which module 4 is really based on, is Trading in the Zone. It's like classic. You have to read Trading in the Zone, but he's got a bunch of others as well. So I would highly recommend you start to look into Mark Douglas's books. Corelli says I've been moved to the Dragons recently, module 15 at the moment. Yeah, so you just, I would go back and look at module 14 again, right? Because it gives a really solid foundation into the psychology of trading and analysis. But then pick up Mark Douglas's books, right? And that's an absolute must for everyone. So any more questions, by the way, guys? Any more thoughts, questions since we're live? Might as well make the most of this. Mark Douglas, yeah, correct. That's it. Nice. So you can look for him on Amazon, and you can get it on Kindle. I don't know if there's audiobooks. There might be. I wouldn't be surprised if there's audiobooks. But he's got a bunch of them, and they're really good. They're really, really good. Cool. So I know I started late today, but I need to crack on with other things. So my bad for starting late today. Christopher says there is audiobooks. Yeah, cool. Sweet. Nice. Christopher, you're sending me DMs. So Christopher, you're watching, but you're sending me DMs. You're not writing it in the chat because no one else can see what you're writing. So sorry, there's a guy called Christopher who's sending me DMs, but I think you should be writing them in the chat, right? Because no one else can see what you're writing. Chris just said, yeah, you can get them on Audible. Christopher says I'm on my phone. Weird. Huh. Yeah, you must be you're DMing me, right? You're not inside the chat. Ferrant says I saw it. It must be on the group chat. Oh, I don't know, guys. I suck with production, with media production, with this kind of stuff. If you want me to teach you trading, if you want me to do wave counts, you want me to do analysis, you want me to design a bloody nice logo, I'm your man. But when it comes to like this production stuff, this is why Martin is my producer. He's the one editing the course. He's the one that does all this stuff for me because I tend to suck at that kind of stuff, as today has demonstrated. So cool. Any more questions before I go? Corolla says I was on the phone before and I was texting. I could see my message. Yeah, I don't know. So I'll give you guys another couple of minutes. Christopher says for the techies, I can't watch on landscape on my phone. Yeah, somebody else said that, and I don't know I don't know the solution. I don't know how to get around that. Again, technical stuff. Technical analysis I can do, but actual technical stuff, it falls flat. Christopher says just makes wave counts hard to see. Yeah. I think the solution that I think Ference came up with this. I don't know if this works for the live stream, but if you're in the app, which is a shame because the app is really cool. I think in the app people were saying they couldn't go full screen. But if you go into the web app, right, on the on with your browser, then I think Ference just said it. I posted a fix for that, and I think that's what Ference said. If you go into the web app, like the browser app, then it works within that, which is weird because the actual native app is good, and it's a shame if you have to go to the web app in order to watch videos on or live streams on landscape full screen. But I think that's the solution. But Ference said he did a post about it. Maybe Ference, you can like link to it or post it somewhere. So, all right, cool. Let's wrap it up there. So cheers for coming along, guys. At some point I will get the music going because it makes it more kind of more fun, right? It makes it more like a proper show, you know. But until then, that's it for today, and I'll be back. I'm in a temporary place where I'm staying right now with a friend of a friend, and I think by when's next Monday? Next Monday is the 14th. So the 14th, I'm probably going to be in an Airbnb, and then the week after, I'm moving into a really cool villa with a friend of mine. So I'll be somewhere else next week, and then I'll be somewhere else the week after that. That's my life. I'm living the life of a pirate. So wicked. That's it. Cheers for being here, guys, ladies and gentlemen, and I will see you next week. See you later.